Hello everyone, welcome to this week's weekly market view for Monday the 2nd of May 2022 to Friday the 6th of May 2022. My name is Vishal and I'm the head of trading education for Sharekhan Education. Let's dive down deep into the charts and let's look at some of the key levels for this week. Okay, so let's first start with the analysis on the Nifty. Let's start with the monthly chart, and nothing much again has changed on the monthly chart. We are getting into a new month, which is the month of May. So we have a new monthly candle, but the demand zone, which is completely intact right now on the monthly chart of the Nifty, is 15,775 to 15,165, and this demand zone is holding. We are in a period of a consolidation sideways to a slightly bullish momentum right now on the monthly chart, and that is what we see as we go along. Let's move on to the weekly chart. If we go to the weekly chart, we are getting a nice reaction from the weekly. There has been a little bit of a supply zone on the weekly chart. This is more or less like a pivot, but there is still no clear indication of the market falling. What is happening is because of the global cues. Every time the market reacts and creates some new levels of supply, and because of the current global cues right now, we are getting these significant gap downs in the market. All right, so everything is going to be a more or less linked to the global cues right now, but the Indian markets don't look bad as the global cues are suggesting. Let's go on to the daily chart now. On the daily chart, we do see that this level of demand where the market had gapped down into is still holding. Now this is going to be a very, very crucial level because this level has been tested multiple times. So obviously as demand and supply traders, we will not be wanting to take a trade there again. But in spite of the market gapping down again today, the market has held on to this level. So somewhere or the other, this level is acting as a strong support for the market, and if this level holds again, we might see another strong move coming in our markets. So we just need to be a little careful of the 16,969 to 16,800 level, and as long as this level holds, there is absolutely no reason to be bearish on the market. Let's move on to the Bank Nifty. If you look at the Bank Nifty is also holding on to this monthly level nicely, and considerably, the Bank Nifty has played a little bit of a spoil sport because of the recent news of the HDFC and the HDFC Bank merger that has and there has been a tremendous sell-off after that news, which has caused the Bank Nifty to weaken. But in spite of that, the Bank Nifty is still holding on to its levels. If you look at the weekly level of demand, it is this level of demand that the Bank Nifty is still holding on to. And if you look at the daily level, which is this drop base rally level, is also holding. So two key levels, two crucial levels, one on the Nifty and one on the Bank Nifty. And as I said earlier, just like the Nifty level, which is the crucial level, the Bank Nifty is also playing a crucial level on the daily chart. So as long as this level holds, there is no reason to be extremely bearish on the Bank Nifty. Of course, if this 35,029 level breaks to the downside, then it opens a big room for the Bank Nifty to move to the downside. Let's look at our USD INR. So the USD INR is more or less giving us an inverse correlation of what the Nifty and the Bank Nifty are likely to do. Sometimes the USD INR and the Bank Nifty sometimes they move together, and that is where it becomes a little bit of a challenge for the trader to analyze the direction of the market. But if you look at the monthly chart right now, nothing much has changed on the monthly chart of the USD INR. And also if you look at the weekly chart now, again we have more or less we have come into this pivot area, and this is where the USD INR is actually struggling right now. So if by any chance the USD INR begins to move significantly up and tries to break the 77.18 handle to the upside, then it's going to be a challenge for our markets to continue its move to the upside, because then our markets will start weakening. But if by any chance this level holds and USD INR begins to fall, then it's very likely that our markets will also start moving up. And that is the reason why Nifty and Bank Nifty are in that crucial level of demand, and USD INR is in that crucial level of supply. The sector for the week that we have identified this week is the FMCG sector. Now, if you look at the monthly chart, supply zone is still far away right now, and in fact, the level of demand on the monthly chart of the FMCG sector is holding, and this was the reason why you saw a pretty decent rally in stocks such as ITC. Today we have a slightly different stock from the same sector, which is Hindustan Unilever, and we'll be having a look at it. But again, if you look at the FMCG sector, it is just consolidating. There is no clear indication yet. But if we do go to the daily chart, we do see some key levels of demand. So let's analyze some of the stocks that are coming into these key levels so that we can look for some opportunities for the coming week. So here we go. This is Hindustan Unilever, and Hindustan Unilever is holding on to this tested level of monthly demand. We do have a little bit of a barrier on Hindustan Unilever, which is this monthly supply zone, and prices have strongly moved into this area. Now we do see a gap level over here. So in case if because of any selling pressure the stock comes down and fills this gap, then we are likely to see a bounce coming into Hindustan Unilever. So this is our trading opportunity for the week. Let's see how it unfolds, and then we'll come back and review the same next week. Thank you very much, everyone, and looking forward to see you next week, same time, same place. Till then, goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.